Welcome back to the latest Cryptoverse updates. I'm your host, Graham Stone, keeping it cringe this week by filling in for Corbin Fraser, who is traveling the globe spreading the crypto gospel. In today's show, we'll cover Bitcoin's resilience in the face of a massive sell-off. We'll get Goldman Sachs and JPMorgan's market predictions, and we'll suffer through yet another Peter Schiff told you so rant. We'll also explore the wild idea that wars could one day be fought over Bitcoin block space. We've got data for you from a new Bitcoin and crypto adoption report, a sneak peek at some up-and-coming crypto tech hubs, and we'll top it off with a flashy new ETH scaling solution known as Mega ETH. All right, diving right in, let's start with the yen-tastrophe. August 5th, 2024 will go down as the day Japan's yen carry trade became a thing normal people would attempt to understand. It goes something like this. Interest rates in Japan have long been close to zero, so people with the means have been borrowing money in Japan, then investing that money where they can earn more than zero yield. This is called the yen carry trade because the investor earns the carry, or the difference between the higher returns on the investments and the lower cost of borrowing in yen. Now, on July 31st, the Bank of Japan hiked a key short-term interest rate from 0 to 0.25%. That seemingly tiny increase in the cost of borrowing in Japan apparently meant that an army of capital allocators suddenly had to unwind positions in global markets, especially the US. And this is being blamed in part for the crash in both stock markets and crypto markets. For example, Japan's Nikkei had its worst single-day plunge since the 1987 Black Monday crash. Tech stocks in the US were trading like shitcoins, dropping the entire market cap of crypto majors overnight, and Bitcoin, recently flirting with 70K, plummeted to below 49K, taking the rest of the crypto market with it. As the crypto market crashed, it wiped out a cool 1.15 billion in leveraged positions. 979 million of that was from long positions, with Bitcoin alone losing 404 million and Ethereum not far behind at 365 million. It was liquidation city for over 300,000 traders, with the biggest single wipeout being a $27 million BTC position on Wobi. Talk about a rough start to the week. The whole market plunged 17.64% in 24 hours, dropping to a total market cap of as low as 1.78 trillion. Next up, we've got market predictions from the biggest TradFi institutions. But first, I'm incredibly excited to let you know that Bitcoin.com's card is finally happening. That's right, folks. VCard, the purest card in the cryptoverse, is at long last available. Now, if you've been looking for a seamless way to spend your cryptocurrency, look no further. VCard lets you spend your crypto anywhere MasterCard is accepted, making your digital currency more versatile and useful than ever. You can top up with BTC, BCH, stablecoins, ETH, and of course, Bitcoin.com's ecosystem token Verse. And if you're a Verse holder, you're in for a treat. The VCard will soon come with exclusive rewards and discounts for those who hold Bitcoin.com's token. Plus, you can purchase a VCard with Verse and enjoy a 33% discount on the card fee itself. So, head over to card.verse.bitcoin.com. We'll leave a link in the description and apply now for VCard. Our first batch of cards is very limited in supply, so you'll want to act fast. Get your VCard today, folks, and keep it in your pants. Okay, back to the show. So, Goldman Sachs just upped the US recession odds to 25% from 15%, but they aren't calling for panic just yet. Despite unemployment hitting a 3-year high and hiring slowing down, Goldman Sachs chief economist Jan Hatzius and the gang at Goldman Sachs says the economy is stable. No big financial messes, and the Fed is ready to slash rates if needed. So, according to Goldman Sachs, keep calm and carry on, ladies and gentlemen. Also, JPMorgan is basically saying, buy the dip, folks. After Monday's financial mess, JPMorgan's John Schlegel is giving us a wink and a nod, saying it might be time to buy that dip. Their tactical positioning monitor is on the brink, signaling a buying chance is just around the corner. So keep an eye on those ISM, CPI, and retail sales numbers. The dip ain't forever, folks. Speaking of big players, perennial Bitcoin skeptic Peter Schiff is having a meltdown about Bitcoin ETFs, calling them the antithesis of crypto's decentralization and peer-to-peer vibes. He is not impressed with people buying Bitcoin just for profit, predicting a collapse soon enough. Schiff is also taking aim at Senator Loomis's Bitcoin reserve bill, claiming it'll just pump up inflation. According to Schiff, Bitcoin ETFs are like fast food for crypto. Easy to grab, but not the real deal. That's kind of rich coming from Peter Schiff, by the way. Anyway, if Bitcoin drops below 38K, Peter Schiff thinks we are in for a wild ride down to 20K. On the flip side, Matt Hogan, the big cheese at Bitwise, reflected on the current market freakout, likening it to the COVID crash of March 12, 2020. Back then, Bitcoin nosedived 37%, but almost immediately recovered, then 10x'd within a year. So Hogan sees Monday's panic as part of Bitcoin's long-term epic saga. He's bullish on Bitcoin, especially after the 2024 Bitcoin conference in Nashville. With rising political support, like Trump's idea for a national Bitcoin stockpile, Hogan believes it's time to rethink what's possible for BTC. So, despite the chaos, Bitcoin's future might still be shining bright. Switching gears, let's discuss for a moment the somewhat dystopian future envisioned by Bob Burnett, CEO of Barefoot Mining. In an appearance on the Bitcoin Fundamentals podcast, he predicted that Bitcoin block space will eventually be so valuable that people might fight wars over it. So the argument goes like this. As Bitcoin grows to become more prevalent in the world's economy, there will be more demand to access block space at certain times and dates. This need will create a market for block space futures, where Bitcoin mining companies will offer their product, block space, to bidders needing to access the Bitcoin network to transact. Burnett stressed that this will change the notion of the real value of a block, shifting away from its current financial value, which is fees plus subsidy, block subsidy, to a more scarce and finite resource, considering that companies and high net worth individuals will need to access it to complete critical transactions. Eventually, Burnett argues, Bitcoin block space will become so valuable as to spark warfare, saying, quote, "We can probably debate the time frame, but we're on a path where wars will be fought over those blocks." Bringing it back to the current state of adoption in the Bitcoin and crypto world, the picture is rosy, at least according to a report from cryptocurrency research portal Coinwire. The report found that trading volume is on the rise pretty much everywhere. Europe, which is now the biggest market in terms of trading volume, has seen growth of 2.7x since 2022. Asia, which accounts for 36% of global trading volume, has seen steady growth over the last 2 years. Meanwhile, in South America, volume is up 3.4x over the same period. And in Oceania, it's almost 3x up. And in Africa, 5x. The only region that has seen a decline in trading volume is North America, where it's down around 25% since 2022. Coinwire suggests that the decline in North American markets reflects changing market dynamics and possibly stricter regulations or market maturity. Continuing on the adoption tour, let's take a look at some new hubs for crypto coolness and Web3 startups. Abu Dhabi just rolled out its new blockchain center, aiming to make the city the ultimate hotspot for blockchain fun and innovation. They're hosting global events, workshops, and even tossing in a venture capital arm to back Web3 startups. Also, Saudi Arabia is flexing its VC muscles and claiming the top spot in the Middle East and North Africa region, MENA, for Web3 funding, outpacing the United Arab Emirates. With 54% of the region's venture capital and a growing Web3 scene, it is becoming the go-to place for startups. Just a heads up though, regulations are still rather mysterious in Saudi Arabia and they could use some clarity. But if the rules get sorted, Saudi's Web3 world could be unstoppable. Finally, for our last story today, let's take a look at yet another scaling solution for Ethereum, a layer 2 known as Mega ETH. Now, if you're wondering why I'm giving this layer 2 solution the time of day and not any of the other 100 layer 2s, it's primarily that Mega ETH is backed by some of the biggest and most trusted names in the crypto world. These guys raised $20 million in their seed round at the end of last month, led by Dragonfly Capital. And angels include Ethereum co-founders Vitalik Buterin and Joseph Lubin. Now, we've got this incredible deep dive into Mega ETH right here on Bitcoin.com news, and I'll drop a link to that in the description, so be sure to check it out. It's about a 10-minute read. But to summarize, Mega ETH is touted as real-time Ethereum due to its capability to process transactions with sub-millisecond latency and to achieve over 100,000 transactions per second. Now, if that is possible, if that actually happens, this would be faster than Solana, and it would offer performance comparable to traditional web applications. The Mega ETH team have looked deeply into the problems faced by current scaling solutions and are now building something that, quote, leaves little room for further performance improvements to the crypto infrastructure so the industry can finally divert resources to other challenges hindering adoption. With the live testnet coming in the next few months, degens and nerds alike will be able to try it for themselves, and the Bitcoin.com news will of course be covering you and keeping you up to speed along the way. That is a wrap for this week's Crypto Madness. Don't forget to subscribe and stay in the loop. Join us in the Verse Lounge on Telegram to hang out with our awesome crew. We're cooking up some wild things for Bitcoin.com's Verse token, so come see what's up. All right, folks, thanks for tuning in. Until next time, protect those wallets and keep chasing those crypto dreams. Catch you later.